agus fáilte arás to the Crazy House Prices podcast. I'm your host, Kieran McQueen, and today in episode 25, we're talking all about the world of mortgages with none other than Eoin O'Connor from Finance Solutions, also known as the Mortgage Guy on Instagram. I've known Eoin a long time now and have done lots of work with him over the years. He's such a dedicated and knowledgeable guy, and he's so generous with that knowledge. So if you don't already follow him on Instagram, you really should. And in this episode, we'll be covering some of the most pressing questions about mortgages that you, my listeners, have sent in. We'll explore the ins and outs of combining mortgage and renovation costs, which is a hot topic for those looking to purchase a fixer-upper. Eoin also breaks down the first home scheme, offering a clear explanation of how it works, the benefits and the potential drawback. We'll also touch on the best practices for managing complex income situations like overtime when applying for a mortgage, and whether it's better to go with a fixed or variable rate in today's market. Plus, we'll discuss the unique considerations when buying a property from family. You won't want to miss Eoin's expert advice on these crucial topics, especially if you're navigating the mortgage process right now or you're planning to in the near future. Now, before we get into it, I want to be clear that I am in a partnership with Finance Solutions this year. They're my trusted mortgage broker and they've been doing an incredible job for all of my followers that have used them. So let's get into it. Now, today I have Eoin O'Connor of Finance Solutions, the Mortgage Guy on Instagram, as you will all know him as, to come and chat to us about all things mortgages. So, Eoin, how are you?
I'm very good, very good. Happy Monday. Delighted to be asked on.
Now, we've done a good bit of work together, and as I will have said in the intro, you know, I think you're great, and I think the whole team you guys have there is great. And I'm a big believer in using a mortgage broker. I've said this from day one. It's even in my book. I just think it's an absolute no-brainer as a consumer to have somebody there to hold your hand through the whole process. Think of it like if you had a friend that bought 100 houses a year, you'd be going to them for advice on how to buy a house. So that's basically what your mortgage broker is. If they're doing this hundreds of times a year, they're going to have the most experience. So just on your side of things, what are you seeing from people in terms of, you know, what's your general advice to people in terms of going to a mortgage broker rather than, say, going direct?
Yeah, I'd always encourage anybody to reach out to us at least 6 months in advance anyway, just to put a plan in place, because without a plan, you know, you could fall at the final hurdle when you see the dream home and then you've realised you haven't done what you needed to do. And I always kind of break it down to 5 simple steps. Simply, your income will determine how much you qualify for. You need to demonstrate you can afford the monthly payment. You need to have your 10% deposit. Your accounts need to be ordering, you have a clean credit history. And then I suppose to delve into your question in terms of why use a broker, it's just more options. You know, it's why walk into one bank and they'll tell you how great their products are. They can tell you what loan amount you can get. But if there's better rates elsewhere, or you can get more of a loan amount elsewhere, that bank advisor is not going to tell you that. Whereas a mortgage broker, we're impartial. We're trying to find out what lender meets your needs. That could be which lender will offer me max lend, which lender will offer me the lowest rates. Do they offer me the ability to overpay? Because that's huge. People are looking at this, how to clear me mortgage quicker, save myself some money. So we will have a consultation with a client and see what's important to them. And we'll simply basically look at all the lenders, because we currently in Finance Solutions deal with 9 lenders. Try to find a lender to meet their needs and make a decision from there. So that'd be number one for me, is just more choice. Experience is key. You know, we deal with this kind of stuff every day. We do deal with straightforward applications, but we also deal with a lot of complex applications in terms of people that may not be permanent in the role, have credit history issues. We deal with this kind of stuff every day. So experience is key, especially when you're making your biggest financial commitment that you'll probably ever make. You want someone in your corner, experience, that deals with this stuff every day, that's going to guide you from the very first conversation throughout the process, when you go sale agreed, if you need anything extending, until you get your keys. And then as long as you pay your mortgage, everybody's happy.
Yeah.
And then lastly, it's free. We don't charge a fee at Finance Solutions. All brokers, some brokers charge a fee, Finance Solutions don't. But all brokers get paid 1%. So it's the same amount for every lender. We're not biased towards any particular lender. We get paid 1% only when you draw down the mortgage. Okay. So that's a key thing for people. People think there's some sort of catch with this. Why should I go to you? Do I have to pay it? Is it added onto my mortgage? This is not true. At Finance Solutions, we do not charge a fee. Our goal is simply to make your dream of owning a home a reality.
It's one of those things where when people hear it, say they're starting out for the first time, they hear it, they were like, but like there has to be a string attached somewhere. It sounds too good to be true, but it actually is the case. You're getting paid the same regardless what lender. It's basically a matchmaking service. You're finding, okay, well, this lender will have, will suit your application a little bit better. It's basically Tinder for mortgages. Is that how we describe it?
That's it. We swipe right for the right lender for that client.
I don't know which way you swipe. You see, I'm too old for Tinder.
Either do I. We'll move on.
Yeah, we'll move on. Anyway, I do anyway, and I'm sure you do as well, get a million questions in about mortgages. And I hate giving people the answer, it depends. So I put a question box up and I told people, send in your questions. I think it ended up being over 100 questions in. So I have whittled those down to 5 kind of bigger questions, and then we'll do 5 quick fire questions towards the end. And I asked people to put in as much detail as they could in the questions so that your answer isn't just, it depends, because my application is not going to be the same as someone else's application. Everything is different. So that's why, not to keep banging the broker drum, but that's why it is so important to go to an experienced broker, because they're able to actually go through it all and say, look, this lender is a little bit more strict on this, or this lender will bring you up on the pay scale or whatever. And people just won't know that by themselves. So that's where the broker comes in. But looking at, say, we'll get straight into it. So the first question here, and this is a really hot topic, especially now with the vacant home grant and all that, but we'll talk about that later. But number 1, combining mortgage and renovation costs. So the question that came in was, please could you explain how a mortgage works for a house you may buy that needs a lot of work cosmetically and possibly adding an addition? So it could be deemed livable from the bank side, but bought with the intention of fixing it up and making it modern.
Yeah. So in terms of when people come to us, the main thing is they may not have a property and they want to just get their mortgage approval. Your mortgage approval, how much you qualify for, is solely based on your financials in terms of your income. Okay. So the main thing is to get your approval, first of all. In terms of, regardless of what the bank will offer you in terms of mortgage amounts, they can only give you 90% of the purchase price. So a lot of people think I qualify for 400, I have approval here for 400 grand mortgage. I've bought at 300, so I'm going to take the extra money anyway to do the works. That is not the case, because it's actually a central bank rule that the bank can't give you 90%, more than 90% of the purchase price. So what way it works is, when a client comes to us for a house that's, whether it's habitable and they just want to do some construction works, or whether it's not habitable and it's in need of renovations, we ask them to get a builder's quote for the works involved. Now, you'd probably get a structural survey, especially if there's a lot of works involved, and we'll review that, and we'll generally ask you to get costings done for the works that is needed to make it habitable of what you're looking to do. The main thing is, the bank's not going to give you money for furniture, paint the doors, all that. The lender will only lend additional money if the property value increases with these works, and that's generally construction works. It's not just, as I said, paint the doors. So the rule of thumb is the bank can give you up to 90% of the purchase price and up to 90% of the construction costs. So if we use an example of, let's say you bought a house at 300,000 and the bank can only give you 90% of that, so that's 270. So where the banks can give you money, let's say you came to us with a quote of 50,000 euro. The bank can look to give you up to 90% of the 50,000. Okay, so 45,000. So therefore, the 270, which is 90% of the purchase price, and the 45,000, which is 90% of the construction costs, that totals 315. So the rule of thumb, remember, let's go back to, the lender can only give you up to 90% of the value. The value of the home will have to be, when these works completed, a minimum of 350. If it's more, even better, because 90% of 350 is the 315. Therefore, it's within the rules. And you probably think, well, how does the bank quantify how much it's going to be worth? Well, when you get that builder's quote, a valuer goes out to the property, values in its current state, and says it's worth whatever, 300 now, but I've looked at the quote, with these works it's now worth 350 plus. Therefore, as long as your income qualifies you for the amount, you can then borrow the additional funds.
That's really well explained, and it's something that a lot of people are unaware of. These things are available. I call them renovation mortgages. I'm sure there's a proper name for them, but that's the easier one to explain to people. And it's something we did try to do, but we weren't able to get it in the end. So we had to sort of kind of finance the renovation ourselves. And I would have absolutely loved to only be paying a mortgage interest rate on it rather than a credit union one. So
Um,
it's a really, again, it's so important that people, if they're looking at going down that fixer upper route, to chat to you at least 6 months in advance, if not longer, to make sure that you've got a really steady plan in place to know that this is the route we're going down, because say you can't afford new builds in your area, so this is the route we're going down. And then that will lead me on then to question two, because if someone is struggling to afford a new build, which I think probably everyone is at the moment, the government have these schemes mostly for new builds, and people know my own thoughts on these schemes, but as I always say, if they get you into your home and you've done your research and the maths and it works out well for you, then grand. My issues with the overall macroeconomic thing of it, but that's a whole other podcast. But so let's say the first home scheme, because the Help to Buy scheme, everyone is, that's been around a long time now. Everyone's fairly aware on that. So in terms of the first home scheme, can you explain how the first home scheme works? Specifically, I'm curious about how it affects your mortgage application. So what are the benefits and the drawbacks? And then what happens when you want to maybe sell or remortgage your property?
Yeah, so the first home scheme was introduced by the government. It was simply there to bridge the affordability gap between what people could get approved for. So you must max out your mortgage approval and what you're looking to buy for in your 10% deposit. So any gap there, they're willing to bridge that by up to 20% of the purchase price, okay? If you're using the Help to Buy scheme. Because remember, the Help to Buy scheme is where you can get up to €30,000 towards your deposit on a new build. If you're not using the Help to Buy scheme, the government will bridge the gap by up to 30% of the property value, okay? So I suppose it's for first-time buyers, buying a new build or doing a self-build. There's also people that can qualify for this scheme under the Fresh Start approach. The Fresh Start approach is where you've been insolvent, bankrupt, divorced, and even a relationship breakdown.
Yeah.
And you've sold the house previously and you want to buy a new build. You can look to avail as a Fresh Start approach, and you apply for that through www.firsthomesscheme.ie. But it's nothing to do with your income. Still, a lot of people think, how much income do I have to earn? It's not. You must be a first-time buyer. You must buy a new build or do a self-build, and there's caps involved for each county. Okay, which obviously Dublin is up to 475, parts of Kildare are 425, etc. So once you're under them caps, you can apply for it. But if I just give you a quick example, if you're, let's say, a couple on €80,000 of an income, the max mortgage you can qualify for 4 times is 320,000. So if you're looking to buy a 450, you're thinking, how the hell am I going to buy a 450? I'm way off here. Well, the bank, regardless of what scheme you're availing of, needs you to have a 10% deposit, which is 45,000. So let's say you used 30 grand in Help to Buy and you 15,000 in savings. There's a gap there of 85,000. And remember, you can get up to 20% of the first home scheme to bridge that gap, which on a 450 property would be 90. So the fact there's a gap of 85,000, therefore, all of a sudden, you can now buy a house at 450,000. And people always ask as well, how do I apply for it? Do I apply for like the Help to Buy scheme? No, you apply directly through the First Home Scheme website, and you need 2 things. You need a development address and you need your AIP to show you maxed out your approval. And then they'll issue you within 3 working days what's called an eligibility cert. And that allows you to give that to the broker to say, this is how I'm bridging the gap. But the key thing I want to get from people is, because we get it every day, people still think you can get your 10% deposit from the First Home Scheme. It's not. You need to have your 10% deposit plus your legal fees and stamp duty. It's only there to bridge the gap between your max mortgage approval, your 10% deposit plus fees, and the purchase price.
But it can be used with the Help to Buy scheme to help with your deposit.
Up to 20%, and you must be with a participating lender, which is currently the AIB group, which consists of Haven and EBS, Permanent TSB, and Bank of Ireland. So if you're with Finance Ireland, Avant, ICS, you're going to have to switch lender if you're looking to avail of that. But once again, when someone reaches out to us, we'll kind of tease you looking at new builds, second-hand homes, and that could help us nudge. If we know they're using the First Home Scheme, we're probably looking at those 3 lenders only. So that, once again, it's the key about going to a broker.
I remember looking at these schemes for when I was writing the book, and there's new ones out even since I wrote the book, and I was on to the publishers about, maybe looking at doing a refresher of the book. And even I haven't studied it before writing the book and researching it, and even now I deal with this as you do all day, every day with questions and all. I still do find it a bit confusing. So I would just say to anybody, if you're feeling a bit confused about all that, the figures, First Home Scheme, Help to Buy scheme, all this, Don't worry, it is confusing. Just that's where, an expert will help, like on will help you basically understand it. And if you go in with a development in mind and figures, it tends to be a lot easier to actually digest. So I would say just reach out to Finance Solutions, and if that is the route you're thinking about going down, and it's when you get more individualized advice, I think it starts to make a bit more sense. Is that fair?
Yeah, and not only that, Kieran. Like the thing is, there's obviously we know the supply issues, but once again, it's highlighting as well that without certain schemes, because it is a challenging market, people wouldn't be able to buy these. So there's over 4,000 people have applied for it and been approved for it, and over 1,900 people got keys to their home that they wouldn't have been able to buy without these schemes. So once again, it's about putting the right mortgage lender for you, but being informed of having a broker that knows about all these schemes, that knows about complex issues, that can guide you and literally hold your hand throughout the process. And that's what we do at Finance Solutions.
Yeah, now if only all the rentals were actually available to buy, that would be even better. But let's not go down that one.
Well,
Next is about fixed rate endings. So the question is currently switching after a fixed rate ending, trying to maximize approval with overtime included. So I work in healthcare. Much of my income comes from overtime, not officially rostered, but consistent over the years. I'm looking for the best mortgage provider who will take this into account. My new broker doesn't seem to fully understand the nature of my job and how reliable my overtime is. Any advice for finding a provider who recognizes consistent overtime? So switching, you're looking at a couple of things there. Switching, fixed rate, overtime. It's quite a good question.
Yeah, so in terms of switching, it's quite easy because, look, you're not buying a new property. You're simply just looking to get a better deal off another lender. Just bear in mind as well, lenders will generally send you out your fixed rate options 3 months before the fixed rate's up. And we always say to clients, make sure you reach out to us. And we'd always diary forward for existing clients. Once again, the advantage now the broker is not just a client for the initial mortgage, client for life. We'll make sure you're getting the best rate throughout the term. But let's go back to the switching. Switching is very, very straightforward. As long as you're making your mortgage payment and you're not under financial pressure, as in since you took the initial mortgage, you've taken 10 loans, that's affecting your net disposable income. It's very straightforward. Yes, there's solicitor fees involved, which average about €1,500. Yes, you can get a valuation on your home, which is about €150. But a lot of lenders cover those fees. Avant will give you 1% of your mortgage to switch to them. Permanent TSB will give you 2% cash back based on your mortgage balance. So there's no kind of cost to it. The lenders will incentivize you to switch them. And their job as a broker is to make sure it's worthwhile switching. Because if we're doing figures at the start and chatting to you, there has to be some sort of financial incentive to do it. But it's quite quick as well. You're probably looking at the quickest lender we'd probably have you wrapped up within 3 to 4 weeks. The longest lender, probably 2 months. So it's a lot quicker than just a normal mortgage application. But certainly reach out to us for Finance Solutions. We deal with 9 different lenders in terms of the switch. And to go back to a second point in terms of maxing out the income, I assume they're probably looking to release some equity if they're looking for additional borrowings. In terms of the additional income, the main thing, like people can think their overtime commission bonus is guaranteed, but the main thing with lenders there, it needs to be consistent. You can't just go into a new job and say, I'm getting a bonus next year of 100 grand. It's like, that's great, but you haven't earned it yet. So there's certain sectors as well that we'd be familiar with just from experience that we know it technically is guaranteed. Whether that's on every payslip, you can clearly see it, or we'll ask for the last 3 years employment details from, which is basically your old P60, and that shows the total income earned over the last 3 years. So we'll ask for that additional documentation. Now, if we need to squeeze as much of the person's income out of the lender, we will make sure we ask for that additional documentation to back up the information and back up what the client's saying. It's saying this is basically guaranteed. So once again, every lender has different rules in terms of how much of a percentage they'll take of that overtime. But once again, as a broker in Finance Solutions, because we deal with 9 different lenders, we know which lender will look at taking the max amount for them.
And assuming if they're in healthcare, they're probably going up on the pay scale as well. So releasing equity is could be great. Could finance then putting an extension on or whatever. So it's a really, really good question. Next one, buying a house from family next year, moving to Ireland this year and getting everything in place for mortgage approval. Will buying from family affect which mortgages we can apply for, or do banks not look at that?
No, so the main thing we ask for is when someone sale agreed is to finalise everything, because people think when you go up for mortgage approval, you have to finalize the purchase price, the loan amount, the rate. Right now, it's when we initially meet with a client, it's finding the lender that meets our needs. Okay. So to go back to the question in terms of, does it matter whether you buy from family? The answer is no. The main thing is we will ask the estate agent details when you give us property details. And if someone says, why not family or family friend, that's fine. It's a private sale. We just ask the valuer to arrange access to the property with that person. So whether that's a family member or family friend, it doesn't matter. The lender will solely work off the contract price. So if there's a discounted price, brilliant. So generally what happens there is, let's say, you might be buying off your mom and dad and they're moving to another property, and they might be, let's say the house is worth 500, but they're selling it for 400. That's fine. The valuation will still say 500,000, but the lender will be like, hold on a second, there's 100 grand of a difference. But that's where the family are gifting them equity. So there's various ways it can be looked at. Usually when you're buying off family, there's a discount, but there's not a discount. It's simply a straightforward application. It doesn't matter. Lenders are happy once the valuation comes in at the same price as the purchase price or the property value. But if it is discounted, a gift letter will box that off if you're buying from family. So it's very straightforward.
The gift letter is important. Good question. Good answer. Thank you. Next one. This is a really common one and very current at the moment with fixed rates and variable rates. So the question is, my mortgage is with the credit union and I've decided to go with the 5% variable rate for now, considering the rumours that interest rates are due to drop. My options were 4.75% for a 5-year fixed, 5% for a 3-year fixed, or 5% variable. Do you think a variable rate is the best option right now, or should I lock myself into a fixed rate considering the current economic climate?
So once again, everybody is different in terms of what they want in terms of rates and their opinions on interest rates. I'll give you a bit of background in terms of why I don't think rates are going to drop significantly. We're not going to probably see the likes of 2.5% or under 3% anytime soon. The reason behind that is obviously due to inflation and the way things have gone. The European Central Bank passed on 10 rate increases, totaling 4.5%. Okay, so the average Irish lender passed on 3 of those rates up to 1.5%. So what does that tell you? That tells you the Irish lenders, although the ECB went up significantly, they were slow to pass on the rate increases. So in my opinion, and this is simply my humble opinion, is the Irish lenders, I believe, will be slow to pass on any rate decreases. So we already know the ECB have slightly reduced the rates, and then they decided not to on the latest rate reduction to pass on a rate reduction. So remember, it's up to the relevant lender whether they pass that on or not. If they do, and rates fall through the cliff, happy days, the variable rate was a great decision. But from a lot of first-time buyers' point of view, I kind of want to know exactly what my repayments are. And the majority, those rates are actually quite high with the credit union. The majority of rates out there, the lower rates are fixed rates. So, like from my point of view, if I'm buying a house, whether it's a portion renovate a new home, I want to get used to my mortgage payments without worrying about whether rates are going up or down. So the majority of our clients are kind of going for a 4-year fixed rate. And the reason behind that is the majority of the lowest rates out there are 4-year fixed. That's number one. A number of lenders that offer this 4-year fixed rate allow you flexibility to overpay. So you get the security and you get the flexibility to make overpayments as well. And the lowest 4-year fixed rate, if you're paying a 10% deposit, is 3.8%. If the BER of the home, so the energy rating, which you will see on every ad that you look up, if it's a green mortgage, as in if it's B3 or higher, the lowest 4-year fixed rate is 3.45%. So those rates are significantly lower than this 5% on the variable rate. So that person is clearly expecting a massive drop off. Personally, I don't see it. And all I would say is you go with the rate that you think suits your needs. We will have that conversation with every client. Do they want security? Do they want flexibility to overpay? But right now, the majority of fixed rates that are low are fixed rates. And I personally can't see a massive drop off in rates anytime soon.
I think a lot of people maybe aren't aware that historically it used to be your variable rate was lower than your fixed, and the fixed rate usually was higher, and you were paying that premium to have that security every month and knowing exactly what it's going to be. It's just since interest rates went really, really low and even went into minus for a while, that things kind of flipped around and the fixed rates became lower than the variable rates. I know that's just a more historical thing, but also people are maybe looking at the the fixed rate and then looking at the variable rate and then wondering, okay, is this going to drop? I don't think we're ever going to see this kind of minus interest rate again. And I know we in Ireland had amongst the highest interest mortgage rates in Europe for a good few years. And that was because the lenders didn't pass on as many of those ECB drops. But now we're getting the benefit of that they didn't pass on the increases as well. So ours have been a little bit more steady and haven't been as volatile going from, say, I know in Denmark you were able to get a mortgage for 0.8% for a good few years. But now they might be looking at 6%. So ours have kind of been a little bit more consistent, which is a good way to look at it. So
just on that as well, just the main thing is, like, interest rates will rise and fall throughout the mortgage term. Like, we had our generation had a very good, where all we see is rates just go down and down. The average interest rate between 1993 and 2023 is 6%. So when you think about it that way, it's like, you know what, the rates that are being offered right now is good. It's just we haven't seen it before. So we've seen rates go up significantly. It's like, hold on a second. But bear in mind, as a broker, we have that chat with every client that goes sale agreed in terms of what rate suits them. Because you can go fixed from 1 year up to 30 years if you want that for a 30-year term. But it's just about finding the rate that meets your needs. And everybody has their opinion, but it's about having that conversation with a broker that's experienced, that's been in the industry a number of years, to kind of manage expectations and say, kind of put it back to the client. What do you want from a rate? And then make your decision once you're fully informed.
I don't have many regrets in life, but probably my biggest regret is not grabbing that 1.95% Avant 30-year thing I did, because we could have switched to it. I was like, oh, it's like the effort of it. I should have.
Hindsight is a killer.
I know. Anyway, right, we'll do 5 quick fire questions then before we finish up. Right. So, first one, switching mortgage rates midterm. So once you're in a 5-year fixed term, is it possible to change after 1 year? I have 4 years left, but I have the opportunity to better my BER rating to a B3 or higher, which will give me the option then of the green mortgage rates. But can I change before my 5 years are done?
So the only person that allowed to tell you that will be your bank. So make the call today, give them a ring and ask them, can they do that? Some might charge a fee, some might be fine and say, yes, send me in your BER and we'll adjust your rate. But the only person that allowed to let you know is your current lender.
From my own personal experience, I had a 3-year fixed and I switched after 1 year. Just over 1 year, and there was no breakout fee, so that was grand.
You can get a better rate, go for it, but just give them a ring, make sure.
Next one, my boyfriend and I are planning to apply for our mortgage. We're both in permanent jobs, but since speaking to our broker, I applied and interviewed for another job. Does it make sense to apply now?
So once again, it depends whether you're in the same industry. You could be getting a promotion within the company, therefore it should be okay. But the main thing I'd say to you is there probation? That's the main thing you have to find out. And it might be worth having that conversation, because people are nearly afraid when they're being offered new jobs to say, look, I'm in the middle of a mortgage application, I want to apply now, but the probation would stop me from drawing down if I find a house. So the main thing is the probation. Their lenders generally want you to pass your probation. You can get approved while on probation. A lot of people still aren't aware that you can get approved while on probation, but a lot of lenders won't allow you to draw down. So it depends how quick you find a property. So just have that chat with your prospective new employer. How long's the probation? It's usually 6 months. So just find that out before you do anything.
Okay, deadly. Next one, is it worth to save as much money as possible for the down payment or the deposit? And does having more than the recommended 10% mean the loan will be easier to pay or give you an option to get a bigger loan?
So in terms of your deposit, a lot of people think I have a great deposit, I don't need to show certain things. Like, the main thing is you need to have a minimum of 10% deposit. The more you pay down, lenders actually offer you lower rates. So if you end up paying a 20% deposit, let's take Avon, for example. They offer a 4-year fixed at 3.8. If you pay a 20% deposit, it's 3.6. So lenders incentivize you, because the more deposit you pay, the less they're giving you. Therefore, the risk is minimized. Okay? So in terms of putting down a max deposit, it depends on the person's circumstances. You could have someone with a lot of money, and like, as long as you have an emergency fund, because I bear that in mind. I hate someone to put all their money into a mortgage, because you can't take it back out once you put your deposit on, and then have to borrow for car finance. Something goes wrong on the house, they have to go to the credit union to borrow on that, and all of a sudden you're thinking, should I have just paid the 10% deposit and just held on to some of that money? So it all depends on your circumstances. Certainly, if you have the money and you leave yourself with an emergency fund after that, the less you borrow, the better for you, because you pay less money back to the bank.
There's also nothing to do with mortgages, but let's say you've a big chunk of money there, you're lucky and you've a load of money there. Is is if you have enough there to cover your deposit, is the extra money you have there, could that be better invested in a fund with a much higher interest rate than you're paying on your mortgage? So, that's where it comes to getting professional advice is so important.
Or invest in your pension,
Yeah.
take tax relief on that lump sum that you pay towards your pension, plan for retirement. So there's lots of things you can do, but it's carefully you look at all angles before you make that decision.
Next one, how forgiving are the lenders with historical bad debts if the debts have been cleared and the wait time has elapsed?
So the wait time is the key aspect here. It all depends how long ago. The general rule of thumb with lenders, especially if it's significant arrears, is 2 years from when the debt was cleared. A lot of people that have credit history issues in terms of missed payments from whether it was 10 years ago, 20 years ago, whatever it was, they don't realize that stays in your credit report until 5 years after the debt's cleared. People think, I haven't paid it in 5 years, it's going to go. It does not go away. And the key thing the lenders look for, I always say, because the lender's going to find out, because when we actually submit an application, we can tell you everything's perfect. But when the lender gets the application, they run a credit check. So any active facilities will show there, anything paid back within the last 5 years, more importantly, something that hasn't been paid back will show. It depends. It depends how many arrears there is. If the debt was paid back, did you engage with the lender? This is the conversation we will have with clients. So I would advise anybody, if there's a 5% chance that you could have a credit history issue, don't be afraid of your missus, if what she's going to think, or don't be afraid of what the broker's going to think. We're not here to, judge you. We're here to help you. Is get your credit report. You can get your credit report on www.centralcreditregister.ie, and it's free. If there's nothing there, you've peace of mind knowing when you submit the application, nothing's going to pop up. And if something's there, we know what lenders will look at and what lenders won't. So please get your credit check.
And there can be things there that people aren't aware of. If they bought a TV on like 0% or whatever, or on the home thing or whatever it's called, like those things do appear on your central credit register and you may not even know. You just didn't want to fork out $2,000 for the telly, so you're paying whatever a month or a couch or whatever.
People think I've cleared the debt. Surely the bank's going to give me the money now. It's like, no, you literally cleared it because you applied for a mortgage and you've only decided to clear it because you know it's going to affect your application. So literally, if there's any inkling or you have a debt out there, pay it back today. Use this podcast as an incentive to just get rid of it today. It doesn't matter if your savings are depleted by $2,000 or $3,000. Get rid of it today. You don't realize how much it affects your mortgage application decision, regardless of how your higher income or deposit is.
And then the last one then is another one on mortgage for renovation. So if I want to buy a pre-loved house, I like that word, for $300,000 through a mortgage and the house is not really livable, is it possible to get a mortgage higher than the cost of the house to allow the extra money? So that's gone back to the first one. So it's like a renovation mortgage, but I guess the difference in that question is if it's not livable, because the first one was it's livable, but you want to do some structural. This is maybe a home that's not deemed habitable. So it is a different mortgage, isn't it then?
It's the same principle. You get your max approval for your AIP, and then literally when you go celebrate, the lender's going to look at the ad first of all and see it's probably not habitable, and then we get the valuation. So a structural survey will be needed whether the property is over 100 years old or whether the valuer feels it's prudent to get one. So if there's work, once again, it's making sure you have someone going out there getting quotes. Because the lender won't lend more than 90% of the purchase price unless you can get quotes. We need to see the works. And don't forget, there is a scheme there called the pre-Conlan scheme, in which you can get up to €50,000 towards the renovation works if it's vacant over 2 years. If it's classified as derelict, that's topped up by a further 20,000. So you can actually get money towards, and now it's paid at the end when works are actually complete. So make sure you keep your receipts and you apply through your local council for that. So there is help there. But once again, the same incentive. You get your approval, you provide the bank with all the information. It's the same type.
But it definitely is possible. And I just did a podcast on the vacant home grant, so people can check that out, where I speak to a couple of people who have gone through it and stuff. It's I think the concept of it is really good, especially that it can be more owner occupier focused, which is what we're all about here. So that's it for all the questions. Thank you so much, Eoin. You're a legend. I just know from working with you for so long, I know how dedicated you are to your job, to your clients. And it's why I'm always sending people to you. And I know we're in a partnership this year, but even before that, I was always sending people to you, and I always will, because you're so generous with your time. And I know better than anyone how tough it is to keep getting back to people in DMs, and you're doing it as well on top of a full-time job, doing everything on the Instagram, putting the content out there. So really, really appreciate you coming on and giving us your expertise.
Brilliant. Thanks a lot, Kieran. Good chatting to you again.
Agus Sinné Lahai on episode shut of the Crazy House Prices podcast. I hope you found my conversation with Eoin O'Connor as insightful and helpful as I did. We tackled some of the most common yet complex questions about mortgages, from renovation financing to whether a fixed or variable rate is right for you. And remember, whether you're a first-time buyer looking to switch your mortgage or navigating unique circumstances like buying from family, Eoin's advice highlights the importance of having a knowledgeable broker on your side. If you're in the process of buying a home or just starting to think about it, be sure to reach out to Finance Solutions, who, as I said, are my trusted mortgage broker, and they can guide you through the maze of options and help you make the best decisions. If you're enjoying the podcast and my Instagram and want to show your support, head over to patreon.com/crazyhouseprices. Your support not only keeps this podcast and the Instagram page going, but it also gives you exclusive access to bonus content like detailed Q&As where I answer every single question sent in. Plus, you'll get the unique opportunity to engage with my community of over 105,000 followers, asking them questions that Google just could never answer for you. Also, my book, How to Buy a Home in Ireland, is available nationwide. Just Google it and you'll find it in stock somewhere, or else rent it from your local library for free. Anyway, thanks a million. I'll chat to you soon. Slán go fóill.